Unlocking a $1 trillion Nigerian economy hinges on strategic, sustainable financing and attracting catalytic capital through innovative instruments and exploring the power of partnerships. Hello there and welcome to this Focus On, where we put the spotlight on RMB Merchant Bank Nigeria as the bank looks to bridge sustainable financing gaps on the continent. I'm David Alabi. RMB Merchant Bank Nigeria hosts a side event at this year's Nigerian Economic Summit. The Chief Executive Officer of RMB Nigeria's welcome address kicks off discussions with a clear call: sustainable financing is no longer a choice, it's the foundation upon which economic resilience must be built.
In a world facing complex challenges from climate change, resource scarcity to demographic shift and digital disruption, the need for sustainable, inclusive, and resilient growth has never been more urgent. At the heart of that growth lies one critical enabler: capital. Not just any capital, but capital that is patient, purposeful, and aligned with long-term development goals. At RMB Merchant Bank Nigeria, we believe that finance must evolve from being a passive provider of liquidity to become an active catalyst for transformation. We envision a future where financing decisions are driven not only by returns, but by impact, where every naira deployed contributes to building industries, empowering communities, and safeguarding our doorway.
The Director General of Nigeria's Debt Management Office speaks on why the DMO is interested in sustainable finance and progress made so far with green bond issuances.
So to date, we have issued 75.69 billion. I believe one has been redeemed, okay? And so the Ministry of Environment, who is our partner ministry, is now, they've sort of reorganized themselves to make sure we're on the same page. Investors, very many were pleased to see high net worth individuals. So it wasn't just the banks and the pension funds, but I actually was impressed to see high net worth individuals participate in it, but we'll talk about it later. So in all of the three issuances that we've done renewable energy, mainly solar. With the first one, we did solar in 4 universities, or about 5. We did in Bayero, we did in the university in Abalike, these are federal universities. We did in Delta, and then there's a 4th state I can't remember now. So what is good about the one in Bayero, for instance, the World Bank was funding, but we didn't have our own counterpart money. No, they don't give you 100%. Okay, so with the green bond, we were able to raise counterpart funding. And it was not only working, but serving the community around as well. So for us, that gives us some fulfillment.
And our panel sessions unpack best approach to de-risk critical sectors, mobilize private investment, and also ensure that economic growth is both inclusive and environmentally responsible.
ESG itself is a framework for identifying, assessing, and mitigating, ESG risks that affect the financial performance of a project or a company. So it enhances risk management. Now, it doesn't solve all the risk problems, right? But at least from an environmental, social, and governance perspective, it enhances the risk profile of a project. But I think it goes beyond limiting it to, a project level and integrating it across the entire institution, which is the approach that NSI has taken. It's not just ESG due diligence, it's ESG embedded within our entire business strategy, right? And so we have 3 core pillars as part of our ESG strategy: institution, investments, and partnerships. So under institutions, when you speak to any unit within the organization, apart from our investment team, any other unit, whether procurement, whether admin, you would see that ESG is embedded in their day-to-day processes. So as an institution, you're trying to enhance and optimize processes, you're trying to run in a responsible manner and all that. When you look at the investment angle, it's in twofold, right? First of all, is integrating ESG across all investment decisions, so from your review process to when you make the final investment to monitoring and reporting up until exit.
Now, flip it to even when projects have become commercialized, there is still the challenge around matching the long-term returns or the patient nature of ESG projects to the short-term expectations for loan repayments of financiers. And so when that happens again, what you find is that a project that takes on the financing from a traditional finance features still has continues to refinance of a structure that facility, not because the project is constrained, but just because there is no alignment between the funding that they have received and the nature of their projects. And so one of the things that we at the bank have done at the Bank of Industry is to look at the entire life cycle of projects and find collaboration where we can come to provide concessional financing across each stage of the life cycle of a project.
Typical fund for our Alithia Idea Fund is that we do equity and quasi-equity investments. But what we're seeing as as the market is moving is blended finance is so key. As we all you will speak to any fund manager now, we're talking about mobilizing domestic investment. And the only way to do that is with blended finance. And you're finding that the DFIs will say, you even have a DFI that say, look, I'm not about this blended finance business. But you'll find the ones that say, okay, I'll take a junior tranche and de-risk this other player, or foundation, philanthropic capital that say, we'll do this to pull the PFAs in. And that's what is happening now.
There has to be an attraction for people like ourselves to be able to issue green bonds. One, from a perspective of a power sector company, a power company in Nigeria, we need to see it as long-term financing. It's local, it's a local currency. So that may push out the international investors, but that's critical for us. We need to see how it includes at our tenor, or in terms of the rates we're being charged to raise the bond. So let's assume that's what happens. That's what we have when we go to the market. From our perspective, being a project providing projects into this, we need to make sure obviously it's bankable. And I think my colleague on BOI co-panelists on BOI spoke a lot about that. We need to make sure, one, it's bankable. It meets the typical requirements, because the same investors look at the same criteria regardless, and there'll be no difference in how they view it. So you need to make sure everything adds up.
We have been a critical part of the fundraising for BOI for the last half a decade. And even on NSIA, I think even when you mentioned Carbon Vista, I was at your board session in London, actually discussing how we can actually partner on developing that, because things like cocoa and co, we are invested in cocoa. So RMB, as I just put it, what people don't know about RMB is that we actually are committed to doing this for the long term. So we don't only provide debt capital, we also provide equity, and we've built things like cocoa. We're fully invested in cocoa on an equity side. And we also have done something that's unique, and come up through a challenge and saying, hey, we should make it, we should put in some incentives, right? So we as RMB is actually committed to try on as much as possible to continue to push the financing in this space. And what we've done is we are committed to a net zero by 2030 as a financier. But we've actually quantified that cost, and brought it forward. So you'll see in some of our finances, we actually create a subsidy. We're probably the only bank that does it. So it might not be much, but you'll see in the loan, we could easily give a 10 bips or a 20 bips subsidy on the margin. Now that's for us is our commitment to that space. So it's not the traditional way of financing, but we have quantified that cost and said, okay, if this is what is our cost to actually committing, then we're bringing it forward to say, how do we now pass that cost into certain types of financing to ensure that they're able to at least get a benefit, to encourage them.
RMB Nigeria says that they have already surpassed their 2030 sustainable finance transaction targets 5 years prior and look to take on more than half of sustainable finance transactions on the continent.
We set a target of 200 billion ZAR in terms of financing for 2030. We met the target this year, almost 5 years ahead of time. So we've been pretty much responsible for more than half of the sustainable financing transactions on the continent. And in Nigeria, we are actually pioneering a lot of thought leadership in terms of driving, especially a lot of our partners towards thinking about more sustainable financing. On the continent, we worked with IFC to do transactions in Rwanda, Zambia, and Botswana. Right. So what we're trying to do is actually work with them to see how we can get some of those transactions into Nigeria.
A sit-down with the Chief Executive Officer offers further insight into how RMB is supporting bankable projects and accessing new classes of investment.
We must also look at how do we leverage diaspora bonds. Of course, that's also to ensure that the huge number of Nigerians outside of the country we are able to actually leverage capital coming from diaspora to also use that in terms of strengthening the economy. Of course, innovative instruments like asset-backed securities and also infrastructure REITs are something that we can do more in terms of leveraging to be able to actually mobilize long-term capital. Of course, we can look at development impact bonds, all right. It's also important to look at how do we assess new classes of investment. And that's when you look at the digital age, of course, we need to look at how do we assess things like tokenized asset, how do we assess things like blockchain-based financing to also leverage that in terms of just assessing new streams of capital to drive the desire of the government and of course of the country. But importantly, it's also important that as we go forward with these, there's a need to actually strengthen regulations for this type of instrument in a way that there is comfort to the investor.
Well, engagement at this year's outing winds to a close, with RMB Nigeria restating its commitment to being a transition enabler and at the forefront of driving sustainable and inclusive growth in Nigeria. Well, this brings us to the end of this focus on RMB Nigeria's participation at the 2025 edition of the Nigerian Economic Summit. Many thanks for watching. I'm David Alabi. Bye for now.